So thanks for joining us today, Norm. Can you just give our audience a bit of a background on who Norm Robinson is and your company, Sentinel Financial Group?
Yeah, sure. No, thanks, Scott. So my background is that I did a commerce degree at university and came straight out of that, went into stockbroking. Back in those days, the old school stockbroking was just like you see in the movies. A lot of bad things going on, a lot of crazy things going on. Many things I didn't like, and when we found something particularly bad going on, my brother and I were working in a firm and we said, okay, no, we'd like to change this industry. So we went out and started our own business, Sentinel. That's about 17 years ago now. And yeah, we've set about trying to modernise share investment, bring in a lot of technology and bring in a lot of transparency.
Okay, great. And through your business and for your clients, a lot of your investments, I believe, are in exchange-traded funds or ETFs.
Yep.
What are they?
Yeah, so ETFs are a relatively modern investment that's come along that makes investment a lot safer and a lot easier. So a key aspect of ETFs is that they allow you to get broad exposure to a lot of different shares all at once. And what they really are is just a bundle of shares that you would ordinarily pick yourself, but they're pre-assembled for you. So, for example, if you wanted to get the top 20 shares in Australia, rather than going out and buying each of those individual shares, you would simply buy one ETF which represents those 20 shares. So it allows you to pick them and create them to start with. And then it also has this really powerful effect of maintaining quality control, because what they are is a rules-based tool. So if it has initially picked the top 20, when it looks at those 20 shares again in, say, 6 months' time, if number 20 is no longer still strong or in the top 20, out it goes, and in comes number 21 to take its place. So you have this really powerful, what I call atomic quality control. So you don't have any work as an investor, but you're always getting this reliable way to invest. And then another feature of ETFs is that they allow you to invest right across the investable world. So not just Australian shares, but also international shares, property, infrastructure, these things called bonds, which is fixed interest, cash, even currencies and commodities. So all through the central marketplace of the stock market, but convenient, safe, secure.
Okay. So some of the key benefits of ETFs: diversification.
Yep.
So in one space you can get access to a lot more shares than just buying individual ones. Cost. So instead of paying brokerage on a number of shares, you can essentially package it all into one and pay one transaction cost or brokerage.
Yep.
What are any other benefits that you feel bring?
I think quality is a key one. So what ETFs do is they ensure that you've always got the best quality or the biggest or the strongest companies. Liquidity, so you can move around, buy and sell very easily. You always know what the price of an ETF is. It's always in your own name, so direct ownership's very powerful. The inherent advantages of the stock market are picked up through ETFs, so live pricing and liquidity.
Okay, cool. And I guess getting exposure to international markets, which can be hard to do for some investors. So some of the advantages of getting, say, access to emerging up-and-coming economies in the world, is that easy to do without ETFs?
No, so investing outside of Australia is very difficult. And it's actually quite surprising that in a world that's dominated by technology, the stock market has been left way behind. So the simple act of even investing into a sophisticated market like America is very difficult, but let alone investing into an Indian economy or something like that. So what an ETF allows you to do is trade on the Australian stock market, so you don't need to leave our shores, but then gain exposure to a bundle of, let's say, the top 50 Indian shares, or if you want to go more specific, you could do the top 100 US technology companies. Pretty much any what we call thematic, any area of investment can be achieved through an ETF.
Okay. And I know there's an analogy you like to use with ETFs. Can you go through the fruit salad one?
Yeah. So sometimes I refer to investing in ETFs as like making a fruit salad for breakfast. So if you think about it, if you want to have a fruit salad for breakfast in the morning, you could go down to the markets or the store and you could choose some rock melon and some watermelon and some strawberries and some kiwi fruit and whatever, and you could go back and you could spend time peeling and cutting them all up and putting them all together and mixing them up. and then put them in a bowl, and yes, you've got your fruit salad. The alternative to that is that you just go down to the local deli and buy a fruit salad pre-packaged in a plastic container. So that's what an ETF is. It's just a pre-assembled portfolio of shares that have been cut up and mixed together, chosen by experts and bought on scale and quality, and then just conveniently available to you at a technically a lower price than doing it yourself.
Yeah, okay. And so in terms of costs of ETFs, there's going to be brokerage or transaction costs potentially, depending on what platform you're purchasing that through.
Yep.
Is there any other costs, management costs or anything like that?
So ETFs are a very low cost way to invest, and the primary cost associated with an ETF is what's called a management expense ratio, sometimes called a MER. And really what that is I liken it to a fuel cost. So it's like the cost of fuel to power your car or an engine. Same thing with ETFs. They have this cost to power them, and it's what they're powering is just maintaining that quality control. So if it's the top 20, maintaining, buying and selling the top 20 shares to keep that intact. So it's not so much a profit margin. It's not like someone's gouging away at it. It's just the cost of implementing the rules that maintain the ETF.